data came out yesterday
Yep.
saying that, oh, it's actually better than we thought, but does that mean that's worse, right? Is the Fed going to raise now, or are they less likely to raise?
Yeah.
But then you have other people saying, no, this is signs that actually things are way better than they were reported on.
Yeah.
So it's so confusing watching different YouTube videos, reading different articles, and trying to read the news. And I guess my question for you is, what is going on? And again, like we always try to do, what's the rest of 2023 look like?
Yeah. So CPI
Yep.
came in, and CPI basically came in lower than expected. The core part came in lower than expected. Then we had PPI. PPI is the producer price index. That one came in much lower. Producer price index is what people pay for. At the end of the day, CPI is a headline type like item, but it's not the Fed's general measurement. The Fed is going to use PCE like we've spoken about before. However, the next part of this is, well, what does it mean for rates? No one knows. We're all going to make some type of an educated guess here, but you're making an educated guess based on the data. So later this month, and I believe it's July 26th, the Fed is going to come out and they're either going to raise, pause, or lower the Fed funds rate. So let's break it down for a second about where we're at. So they've raised 500 basis points from zero. 500 basis points is 5%. Right now, with our current monetary policy, we are in what's called a restrictive stance. So there is about 200 basis points, or 2%, is restrictive against the economy. So that's a headwind. You're on a boat and you're trying to go through Lake Chelan and the wind's blowing at you, the waves are coming at you. That's the restrictiveness that we're specifically talking about. Some people believe because we're already restrictive, why make it more restrictive? When you go to the Fed's own watch tool, they believe there is a 92% chance, this is what the market is betting, is that in 2 weeks, the Fed's gonna raise 25 basis points. I'm gonna just stick with my original call and say the Fed's not gonna raise, but at this point, I don't know that it matters. We're getting data and indication that inflation is coming down, it's slowing down, and rates are high, but they came down a little bit based on this positive economic news, and it's gonna be higher for longer, even though we don't want it to be. So rates are gonna be a little bit higher, and the Fed has two more, in their book to raise in July, and then maybe again in August. Now, whether they do or they don't, though, they're already sufficiently restrictive, so they just may become more restrictive. So you can kind of play this out. I'm betting they're not going to, so I'm in the minority. I'm like 8%. The other 92% believe that the Fed's going to raise. If the Fed does raise, there is a higher likelihood that they're going to have to lower rates quicker, because it's going to become even more restrictive. So go back to the boat analogy. So the boat's going across Lake Chelan. Well, instead of a 5-mile-an-hour wind against you, now there's like a 10-mile-an-hour wind. So it just slows it down that much more. If they do raise it, I believe that we will get a reduction in rates faster. So once again, this is just a simple educated guess. Expect higher rates through the rest of the year, and then probably second quarter next year, expect them to start to calm down. Now, calm down, people immediately start to think, whoa, it's going to go back to the threes. I think next year we might be in the low sixes to upper fives. That's going to be the cooling down. It's going to take until probably 2025 or 2026 for us to get into that 4 to 5% range.